How to submit a self-assessment tax return. Introduction. In this module, you will explore what a self-assessment tax return is, who needs to submit one, and how this can be done. You'll also review important dates and deadlines in relation to self-assessment. You look at penalties and what to do if you make a mistake, and review what action to take if you are responsible for the finance of someone who has died. The topics covered in this module are: Overview. Who must send a tax return? Registering and sending a return. Deadlines. Penalties. Changing a tax return. Returns for someone who has died. Overview. Self-assessment is used to calculate the amount of income tax you should pay. The self-assessment system is used by HMRC to collect your tax payments or contributions. If you're employed, tax is deducted from your wages automatically. If you earn an income yourself and not employed by a person, then you need to report this on a tax return. You are expected to complete a tax return every year after the end of the UK tax year. This is usually the 5th April. Who must send a tax return? It's important to send a tax return if you've earned more £1,000 as a sole trader in the previous tax year, or if you are a partner in a business partnership. The tax year runs from 6th April to the 5th April the following year. You also need to send a tax return if you receive other income, other than your wages or pension, that you are not taxed on, such as rental income if you rent out a property, if you earn money from another country, if you have any savings, dividends, or investments, if you have any tips or commission. Registering and sending a return. You should register for the online tax service to send tax returns if you receive an applicable untaxed income, but there are different ways to register depending on your circumstances. There are different ways to register depending on whether you are self-employed, a partner, or in a partnership. Not self-employed. In order to complete your return, you need to keep records of your finances. When you've registered for the online system, you can complete and submit your return online, or have someone, like an accountant, do this for you. You must submit by the deadline, and then you must pay your bill by the specified date. Deadlines. Let's imagine it's May, and a person has worked on a self-employed basis during the previous tax year. They must register for self-assessment for the previous year by 5th October. Paper tax returns must be received by HMRC by 31st October. Online tax returns must be received by 31st January, and any money owed must also be paid by this date. Due to the closeness of these dates, a tax return should be completed in advance to allow payment to be made. A second payment is typically due as an advanced payment on the next bill in the following July 2. Penalties. If a tax return or payments are late, then penalties and charges may be incurred. A person can be charged £100 for a payment up to 3 months late. If it's later, the charge increases, but the amount depends on just how late the payment is. The charges can be appealed against a person who has reasonable grounds. If a person is part of a partnership and one partner is late in paying their bill, all partners can be charged. Changing a tax return. When filing an online assessment in January for the previous April, you have until the 31st of the following January to make changes. Changing your return can result in money being owed. You can make the changes through the online system. If you miss this deadline, you must write to HMRC. If you submitted your return by paper, you must download and complete another return. You should write your unique taxpayer reference on each page along with the word amendment. Returns for someone who has died. When a person dies, they usually leave someone in charge of their money. This is usually an accountant, a solicitor, or a family member. The person who is dealing with the tax of someone who has died must report the death to HMRC ASAP, and they will instruct you further. Summary. Now that you've reached the end of the module, you've learned that there are even people who are not self-employed or in a partnership may need to submit a self-assessment. Tax needs to be paid on any untaxed income we receive, including tips, commissions, rental income and any foreign income. How to register for self-assessment and the important submission dates you need to remember if you do need to submit a self-assessment. The period of time you have to make changes if you make a mistake on your self-assessment. The possible penalties you may be charged as a result of late payments.